Hello and welcome to the Banker's View from SWIFT Latin American Regional Conference. I'm Silvia Pavoni, Economics Editor of The Banker, and I'm talking to Claudio Irigoyen, who is the Head of Research for Latin America at Bank of America Merrill Lynch. Thank you for joining me.
Sure.
Claudio, we just concluded the panel discussion where we talked about geopolitical effects, global geopolitical effects and national ones on Latin America. The most obvious one is, of course, the trade tensions between the US and China. What are the implications for the region?
So I think the implication is quite significant. We are seeing already through the slowing down of the global trade channel some direct impact on growth in the region. Most of the countries are growing much more slowly in the first quarter than what we thought at the beginning of the year. Obviously, the countries that are more exposed to China are suffering the most, but it's a pretty much a broad-based effect. We are seeing also some slowdown in investment, not only in Latin America, but also in Asia. People are in a wait-and-see mode until they understand what are the implications, short, medium, and long-term implications of what's going on. And our view, and my personal view, is that this is not going to go away. I think it's going to be a escalation, de-escalation strategy from the US and China that will last at least until the presidential elections in the US.
What about the implications for Brazil, for example, where China's become a very important trade and investment partner, where the president, Jair Bolsonaro, has clearly expressed a preference, a very strong preference in terms of dealing with the US rather than China. So how are things going to change and which way is Brazil going to go, bearing in mind, of course, that it is still a very much closed economy?
Yeah, I think that's exactly the significant point in the short term. It's a closed economy that has still significant fiscal issues to deal with, and the Social Security reform that they need to approve in Congress is a make it or break it. If we don't have a good Social Security reform, and by good I mean at least 50% of the savings promised by the government that are approved in Congress by the end of the year, it's going to be very difficult for the governability of the Bolsonaro administration. So if that happens, if we have a good reform, that opens the door for Brazil to pick up in terms of growth, because we're coming from a very depressed levels after the recession, and that could be an excellent opportunity. And Brazil will be able to deal with in a different position in terms of bargaining power with China and the US. If Brazil cannot deal with the Social Security reform, if Brazil cannot deal with their own problems, it's going to be difficult to deal with both, with China and with the US. Yes. And who's going to help more at the margin? It's hard to see now, but I think Brazil has to do the homework first.
Very well. So another issue, another big question mark is over Argentina. We're going to have presidential elections later on this year, and really things could change quite dramatically from the current governments of open markets, pro-business, right-wing, center-to-right party of Mauricio Macri to potentially going back to Peronism. Yeah. So what's going to happen?
Well, I think it's going to be very convoluted dynamics between now and the presidential elections. The first round is in October. The primary is very important in August. Volatility of asset prices is very high. Just this week, we learned that the former president, Cristina Kirchner, decided to run as vice president for her political sphere. We think that might signal some weakness coming from her, but we do not necessarily want to conclude that this is going to be the case, because the strategy here is to try to attract voters from the center that might be the ones that might end up deciding who's winning this election. The key for Macri will be to stabilize the FX market and to try to stabilize the economy. The economy will probably continue contracting between now and the end of the year. And the currency will be really volatile, will remain volatile. We think in July and August, people will dollarize their portfolio more. So the ability of Macri to deal with those risks and sources of uncertainty will be key to determine who's going to win. If Cristina Kirchner wins, I mean, even though she's going to be the vice president, if her political party wins, whether she will do something radical, like defaulting or something like that, hard to tell. My personal opinion is that she has no incentive to do something like that, and she's trying to signal that to the market. But we don't know how the economy will look like by the end of the year.
And this would have, of course, implications for wider economic activity, including, of course, financial services and investors in financial technology and startups as well coming out of that.
Absolutely, absolutely. I think that no matter who wins, next year is going to be a difficult year because you still need to deal with some fiscal imbalances. But obviously, depending on who's winning, the market will give the winner the benefit of the doubt, more or less of the benefit of the doubt. So elections will play a significant role in how the economy will look like next year.
Very well. Thank you for your comments.
Thank you.